Today is Monday, April 24th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Steve, let's start this morning with the soybean market. U.S. soybeans for June, July, and August are now competitive versus Brazil. Will this help U.S. soybean demand?
I think that there's a small group of people that think that it might, because last week the Chinese came in and bought a few cargoes of U.S. soybeans, and it just kind of scratch your head and wonder why, with the record Brazilian crop, why this is happening. And so what the commercials are saying is right now the nearby demand for soybeans is better than the farmers selling, and so that's helping. So the thing we need to watch pretty closely is the July-November bean spread. Everybody's short that spread, and so if we do get some business, you can actually see the spread start inverting more.
What about the money in the market right now? Funds added to their record short grain position last week. What impact does this have?
Makes the market vulnerable for a lot of volatility. They've never been short this much grains. I think they're playing on the fact that we've got record global supplies, plenty of crops in South America, and no real northern hemisphere problem. So weather's going to take a very important role now in price discovery, but it just makes the market vulnerable for volatility and maybe a sharp rally if there is a weather problem.
And what is the latest on world weather?
The National Weather Service came out with their 3-month outlook, and they're calling for warmer temperatures this summer. Rainfall looks to be normal for the most part. The only issue that we have right now is Western Europe is drying out, and that could be a problem. Now the next probably 2 weeks you're going to see some heavy rains across the Midwest. It's going to slow some of the planting down, so you could see a little weather premium put on the corn market in the next week or so, but right now too much rain is not something you can like put a position on a bullish side. So it looks like weather's going to be okay this year, but we do have a couple hot spots that we have to watch.
So is there anything that farmers or end users should really be doing or looking for in the market presently?
Well, the farmers are frozen right now because everything that they're planting right now is below break even, and there's not expectations of a rally down the road unless it's weather related. They have a record amount of corn that they have to sell, not only from last year and next year that they're planting. So, I mean, if they have the capital, maybe they could buy some calls to protect against a rally that they've sold inventory on, and maybe buy that July-November soybean spread just in case something happens and we do pick up a little bit more demand than we thought. But for the most part, this is kind of a dead zone for them, and we really don't expect the markets to start trading weather until a little bit later in May.
I don't want to be too pessimistic, but how much lower do you think, say, corn and soybean prices could go here?
Right now we're about $3.65 on the nearby corn. If we rallied 15 cents, we'd get into the farmers selling. If we dropped 15 cents, we'd probably see no selling, and we have record demand. So that's your trading range in the corn market. Wheat's made some all-time contract lows, and so we could go down another 20 cents in wheat easily if we don't have a weather problem, and probably won't rally much more than 20 cents above where we're at. Soybeans are sitting at around the $9.60 area. They're worth something below $9 unless there's a weather problem, and some people say as low as $8.50. So it's the market that has the biggest move potential, but if you have a weather problem, we could jump over $10 real quickly.
Alan, after making highs in March, the stocks have traded lower as a result of heightened geopolitical risks and the delay in President Trump's tax cut and infrastructure spending proposals. This morning, however, we have started out very strong with the Dow up over 200 points. What are your feelings about the market today?
Well, first of all, we have not topped out in the stock index futures, and this pressure that we have seen in the last month or so, of course, today, as you mentioned, the good gains, were mainly due to geopolitical issues and the apparent delays in some of Trump's infrastructure spending plans and the tax cuts. However, we feel that interest rates are still low enough to sustain this bull market, continue to buy breaks in all of the major indices, and we will see higher prices ahead, including including new historical highs for all of the major indices.
So this morning's rally, they're putting it on the developments in the French election. What's your take on that?
Well, a lot of the shorts that were in the market because of the geopolitical issues are coming out today with, of course, we do have a variety of problems globally, but one lessened problem is what's going on in France as far as the politics there. And of course, there is another election coming up in early May. So our feeling is don't get too involved in the geopolitical issues. Concentrate on the influence of the low interest rates, and stock index futures will continue to be supported because of that dominant influence.
Contrary to the president's comments about the dollar recently, U.S. Treasury Secretary Stephen Mnuchin said strength in the U.S. dollar was a good thing. Does this mean the U.S. is going to continue its strong dollar policy?
Absolutely not. There has been a 2-decade-old strong dollar policy that I think is now being reversed. We had Trump making comments several times now that he thought the dollar was too strong. Mnuchin himself actually said he thought the dollar was too strong, but then recently he had a contrary comment. So I think what he's trying to do is walk back some of the impact of what Trump had said. Our feeling is, in spite of Mnuchin's comments, the strong dollar policy is no longer with us. That means that the dollar index has topped because of that and other influence such as interest rate differential expectations. So after making a 14-year high in the dollar index last year, all of those fundamentals are gone now, and I would look for, at best, a sideways trade in the dollar index.
And the gold market appears to have all the major market moving fundamentals lined up on the bullish side, including an expanded global economy, ongoing geopolitical concerns, and rising global inflation. Prices have advanced nearly $100 since March 10th. How longer can this market bull market for gold last?
Well, first of all, it's a misconception to think that it's the geopolitical events that drive gold. It's actually the inflation influence that dominates in the long term. So today, of course, with the French elections and the flight to quality longs being liquidated into gold, the gold market has been down. But I think this is an excellent buying opportunity to come in here at these levels to buy gold. Once again, to concentrate on the inflation influence that will be the prime driver of a bull market in the gold market. So buy any break in gold, and this is a perfect break, I think, to get long on.
And what about the stocks, Alan? Is it too late for the general investor to participate? I mean, you say the market rally is going to continue. What type of pullback should people be looking for an entry point?
I would say minimal pullbacks. 4 or 5% might be all I would expect. Any break should be used as a buying opportunity, and there's a lot left price-wise and time-wise. In fact, I think we'll see higher prices all of this year in all of the major indices.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.